Good morning, and welcome to the Leap Podcast, your concise, level headed crypto market update from Leap Digital Investments. I'm Patrick Penn. It's Friday, the 31st of July, 2026. Today is a month end special, a look back at July, and a look ahead to August. July had two sides. The hard part: the Federal Reserve stayed tough on interest rates, the US dollar got stronger, and hopes of a rate cut faded. The better part? Bitcoin actually bounced. It rose about 10% on the month and clawed back off its lows. So the price improved, even as the bigger picture stayed difficult. Let's leap in. Start with the Fed, because it drove everything. On the 29th of July, the Fed left interest rates unchanged at 3.5 to 3.75%. That's the fifth meeting in a row with no change. But the vote was close, 9-3. And here's the key part: the three who disagreed wanted to raise rates, not cut them, because inflation has now stayed above the Fed's target for more than 5 years. Under Chair Kevin Walsh, this was a tough hawkish hold, and the bond market took notice. Long-term interest rates jumped to new highs, with the 30-year yield breaking above a level it had held since 2023. The US dollar climbed to a 6-month high. Cast your mind back to early July, when the big question was whether the dollar would weaken, because a weaker dollar has historically tended to help crypto and gold. Instead, it got stronger. So the hopeful story from the start of the month did not play out. On the crypto's desk framework, this now points one way. The Fed's next move looks more likely to be a hike than a cut, and September is the date to watch. That's a scenario, not a forecast, but it's worth knowing that higher for longer has quietly become maybe higher still. Changes to interest rate expectations can influence a range of asset classes, including digital assets, although market reactions are often unpredictable. Now to prices. And this is where July surprised. Remember, June was brutal. Bitcoin fell around 20%, its worst month of the year, bottoming around 58,000 US dollars on the 1st of July and closing below its 200-week trend line for the first time since 2023. From there, it bounced. Bitcoin finished July up around 10%, back near 65,000 US dollars. To keep that in perspective, Bitcoin peaked near $126,000 last October. So even after the bounce, it's still about half off its high. The desk has characterized July's move as a recovery within a broader period of market weakness. However, there is significant uncertainty around future market direction and no assurance that historical patterns will repeat. The desk stays constructive on the longer term picture, not because of today's price, but because of what's quietly building underneath it, which we'll come to. Gold tells a story. It's been weak, pushed down by that strong dollar, and it slipped near $4,000. The desk view is that gold may have one more dip in it, possibly into August or September, toward a long-term support band around 3,800 US dollars, and then could potentially respond to changing market conditions in the second half of the year. One reason: in past cycles, gold has often bottomed and recovered before stocks and before Bitcoin. So it can be an early sign that a potential turn is coming. Once again, that's a scenario, not a forecast, and precious metals prices can move quickly in either direction. There was a genuine bright spot in July, and it's about money flows. In June, US Bitcoin ETFs saw record withdrawals, around $4 billion leaving. In July, that reversed. After the Fed meeting, money began flowing back into Bitcoin's ETFs and Ethereum ETFs, but their best month since April, taking in a few $100 million over several strong weeks. Morgan Stanley even launched a new Ethereum product that passes staking rewards to investors. So while the macro kept a lid on prices, demand and the underlying plumbing quietly improved. One caution on Ethereum though: better ETF flows don't automatically mean a higher price, and the desk still expects Ether to have a tougher patch before it turns. On the rules front, July was about progress and a deadline. The Clarity Act, the bill that would split oversight of crypto between the SEC and the CFTC, passed the House and cleared a key Senate committee. A new version came out on the 22nd of July, adding rules on crypto ATM fraud and money laundering checks. But it hadn't had a full Senate vote yet, and it's stuck on a few disputes. The clock matters here. The Senate breaks for its August recess around the 10th, and without a vote before then, the odds of passing this year drop sharply. This comes on top of the CBDC ban, the bill blocking government-run digital dollar that already reached the president's desk earlier in the summer. So the building continues, but this particular bill is racing the calendar, putting July together. The big picture stayed hard, but the details improved. A tough Fed and a strong dollar kept a lid on prices. Underneath, Bitcoin bounced off its low. Money started coming back into ETFs, and the regulatory groundwork advanced. In the desk's words, this is a test of conviction phase, not a moment that breaks the long-term story, but one that tests patience, because the macro hasn't given the green light. So what about August? First, note what's missing. There is no Fed meeting in August. The next one is in September. So the interest rate calendar goes quiet and attention shifts. 3 things to watch. First, the Clarity Act deadline around the 10th of August. A Senate vote would be a clear positive, and no vote would push the whole thing into the autumn. Second, the Jackson Hole gathering of central bankers on the 27th to the 29th of August. This year's theme is financial innovation and payments, which puts digital assets unusually close to the center of the conversation. Third, and most important for the desk's roadmap, the share market. The desk is monitoring the possibility of broader equity market volatility during the August to September window, which could influence sentiment across risk assets, including crypto. Seasonally, August tends to be a quieter, low volume month, so it's a calmer rate calendar, but a live legislative deadline and a close eye on stocks. In summary, July was the month the tough Fed story came back. No cut, a stronger dollar, and even talk of a hike. But also the month money started flowing back into crypto. The macro is still the ceiling. The long-term building is still going on underneath. August brings a quieter rate calendar, a legislative deadline, and a central bank spotlight on digital assets. And on the desk framework, the window where the market could either steady or enter a period of potentially increased volatility. As always, These are scenarios, not forecast, and the next couple of months will do the deciding. Remain calm and stay informed. That concludes your market update for the 31st of July 2026. Check the YouTube and Spotify links for more information. Thank you for listening to the Leap Podcast.